Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, December 4th, 2025, and here is everything you need to know as the markets open for today. Let's dive straight into overnight action on Wall Street. The American markets wrapped up a solid session yesterday with strong gains across the board. The Dow Jones climbed 0.86%, the S&P 500 added 0.6%, and the Nasdaq rose 0.17%. The rally was fueled by tech and industrial stocks bouncing back on hopes that the Federal Reserve will finally cut rates next week. We also saw some encouraging signs in the jobs data, which came in softer than expected, giving fresh ammunition to the rate cut narrative. Oil prices eased yesterday, adding to the positive sentiment for equities. Now let's talk about how Indian stocks listed overseas are setting up for the day. Looking at the overnight action in Indian ADRs, Infosys ADR gained 1.44%, showing solid strength in the IT space. ICICI Bank ADR ticked up a modest 0.36%, while HDFC Bank ADR barely moved with a gain of just 0.08%. The real story today is in Reliance Industries GDR, which got hammered, falling 3% in after-hours trading. That 3% decline in Reliance GDR is a key cue for Indian investors heading into today's open and likely reflects broader concerns around energy stocks globally. The IT gainers like Infosys are signaling some resilience though, so that's worth monitoring. Shifting our attention to Asia, the regional bourses are painting a mixed picture as we enter trading on December 4th. The Nikkei in Japan has opened strong and is up 1.4%, showing good momentum from the Wall Street rally and fresh Fed cut expectations. The Seng in Hong Kong is trading flat, treading water as investors digest conflicting signals from the region. Shanghai Composite has opened slightly lower, down 0.16%, reflecting lingering concerns about Chinese economic stimulus effectiveness. On Gift Nifty, we're looking at levels around 26,082 as of this morning, down about 50 points from yesterday's close. This suggests a cautious opening for Indian equities today, with investors likely taking a wait-and-see stance ahead of the RBI policy decision tomorrow morning. On the global front, there's one major theme everyone is watching closely. Federal Reserve rate cut expectations are now at their highest in weeks, with market probability sitting at around 87 to 90% for a 25 basis point cut on December 10th. This has been the key driver of the positive momentum we saw on Wall Street. However, uncertainty around trade negotiations between the US and India continues to weigh on sentiment, particularly following Trump's recent policy signals. These trade tensions have kept rupee under pressure, and we saw the currency slip through 90 per dollar yesterday, which is another headwind for our markets today. Domestically, here's what's on the radar this morning. The RBI monetary policy decision comes tomorrow morning, December 5th, and the market is split on what to expect. While some economists expect a 25 basis point repo rate cut, others, including Bank of Baroda, think the central bank will keep rates unchanged at 5.5%. Either way, this is the big event risk tomorrow, so markets today will be in a holding pattern. FII selling has intensified recently, with foreign investors pulling out over 4,200 crore rupees just in the first 2 days of December alone. This outflow spree reflects India's undervalued positioning among emerging markets and continued tariff concerns. On the positive side, domestic institutional investors have been supporting the market, picking up shares worth nearly 4,700 crore rupees yesterday. The rupee weakness at 90 per dollar is also a concern on the macro front. From a technical perspective, Nifty 50 yesterday closed at 25,986 after declining 0.2%. Today's key support levels to watch are at 25,850 and 25,700, while resistance is firmly placed at 26,100 and 26,250. Bank Nifty closed around 59,000 levels yesterday and is finding solid support near its 20-day moving average around 58,900. If the Bank Nifty can hold above 58,500 today, we could see some consolidation play out in the 58,500 to 60,100 range ahead of the RBI decision. On the commodity front, crude oil is trading around $59 per barrel as we begin today, which is relatively stable and supportive for equities. Gold is holding strong around $4,218 per troy ounce, up a decent amount from recent lows, reflecting ongoing safe haven demand. Silver has also climbed to $58.49 per ounce, showing some of that traditional safe haven strength, though the move is more muted. Here's the tactical game plan for today. Given that we've got the big RBI policy decision tomorrow, and FII outflows showing no signs of abating, today is likely to be a consolidation day, where traders should be cautious about running large long positions. The Gift Nifty setup suggests a weak open, so buyers should wait for confirmation on support levels before adding exposure. The Nifty support at 25,850 is critical. A break below that opens the door to 25,700. On the upside, breaking above 26,000 is important to confirm any potential reversal. For traders, it's best to play the range and avoid taking excessive risks until we get clarity on the RBI decision tomorrow. Stay disciplined, respect your support and resistance levels, and remember that tomorrow's policy announcement could be a significant market catalyst. Stay tuned for the evening wrap and send in your questions to our studio line. Don't forget to subscribe to this podcast to hear us every weekday morning at 8. This is Prem with your market morning update. Let's make today profitable.